वेलकम टू अवर चैनल। आज हम NISM 5A म्यूचुअल फंड डिस्ट्रीब्यूटर एग्जामिनेशन का चैप्टर 1 इन्वेस्टमेंट लैंडस्केप के बारे में मल्टीपल चॉइस क्वेश्चंस के थ्रू डिस्कशन करेंगे। पहला मल्टीपल चॉइस क्वेश्चन है, विच ऑफ द फॉलोइंग डिस्क्राइब्स ए फाइनेंशियल गोल? ऑप्शंस आर ए सेविंग्स फॉर ग्रोसरीज नेक्स्ट वीक, बी a vague wish like I want to invest more, C a specific amount and time horizon objective, for example 10 lakhs in 5 years for child's higher education, and D buying a product because someone recommended it. तो अभी देखते हैं आंसर क्या है इसका। इसका आंसर है स्पेसिफिक अमाउंट एंड टाइम होरिजन ऑब्जेक्टिव, फॉर एग्जांपल 10 lakhs in 5 years for child's higher education। फिनेंशियल गोल जो है वो हमेशा मेजरेबल एंड टाइम बाउंड होना चाहिए, इट कैनॉट बी वेग। So financial goal is specific, measurable and time bound. For example, amount plus timeline. Now question number 2. The phrase saving precedes investing implies that objective choice है A. One should invest first and save later. B. Saving is the portion of income left after investing. C. You must accumulate saving idle cash before deploying investment. D. Investing savings are exactly the same activity. आंसर है you must accumulate saving idle cash before deploying investment. ये क्यों है? देखो, आपने पूरा पैसा अगर इन्वेस्ट कर दिया और कुछ इमरजेंसी आ गई, मेडिकल इमरजेंसी वगैरह, तो आप कुछ नहीं कर सकते, आपको लोन पे लेना पड़ेगा या कुछ करना पड़ेगा अगर तुम्हारा इन्वेस्टमेंट जो है वो लिक्विड नहीं है। तो इट इज ऑलवेज रिकमेंडेड कि पहले जो है कि यू फर्स्ट डाइवर्ट पार्ट ऑफ योर इनकम टू सेविंग लिक्विड और शॉर्ट टर्म, देन डिप्लॉय इट फॉर लॉन्ग टर्म सो दैट इमरजेंसी में वो आपको काम में आएगा। क्वेश्चन 3, which of the following is not an asset class typically discussed in the syllabus of NISM? कौन सा असेट नहीं है नीचे में से? असेट क्लास रादर, इक्विटी शेयर्स, बी fixed income instruments, C commodities, D human capital. And answer is human capital without monetization. Human capital is discussed as concept. चैप्टर में जो है एक concept किया है, but not typically listed as asset class in the sense of investable assets. Question 4. What does liquidity risk refer to? Options are A. The risk that investment returns will be high. B. The risk that investor cannot sell the asset quickly without large price compromise. C. The risk of inflation. And D. The risk of government policy changes. And the answer is the risk that investor cannot sell the asset quickly without large price compromise. उसको कुछ ना कुछ डिस्काउंट पे बेचना पड़ेगा इमीडिएटली अगर उसको पैसा चाहिए। इसे कहते हैं लिक्विडिटी रिस्क। इट इज अबाउट बीइंग अनेबल टू कन्वर्ट एन असेट इनटू कैश स्विफ्टली एट अ फेयर प्राइस व्हेन नीडेड। क्वेश्चन 5. Which behavioral bias refers to the tendency of investors to rely on recent events when making decisions? Loss aversion, anchoring, availability heuristic, herd behavior. The answer is C. Availability heuristic is the bias where decision making is influenced by information that is readily available or recent. And the answer is C, conservative. More debt or cash allocations. Question number 7. Which of the following statements is true? A. Inflation increases future purchasing power of money. B. Asset allocation is irrelevant if you pick good stocks. C. Risk and returns are correlated. Higher risk may offer higher return. D. Behavioral biases only affect institutional investors. And the correct statement is risk and returns are correlated. Higher risk may offer, remember, may offer higher returns, not necessarily every time. In finance, higher risk is typically associated with the potential for higher returns. Behavioral biases can impact all investors. Question number 8. Which risk is specific to a given company or investment and can be diversified away? Market risk, inflation risk, unsystematic risk, liquidity risk. The answer is unsystematic risk. Unsystematic risk can be reduced via diversification. Market risk cannot. Question number 9. Asset allocation means picking the best performing stock each year. B. Deciding how to distribute investments across asset classes, for example, equity, debt, cash, in line with goal, risk, and horizon. C. Moving all assets into commodities. D. Timing the market perfectly. So, answer is deciding how to distribute investments across asset classes. For example, equity, debt, cash, in line with goals, risk, and horizon. Explanation: asset allocation is the strategic mix of asset classes to meet objectives and manage portfolio risks. Which factor is least relevant when settling investment goals? Time horizon, cost of the goal, that is the amount required, investors' favorite company, inflation rate. And the answer is investors' favorite company. Investors' favorite company is a choice, not a required parameter for goal setting. Amount and inflation are core factors. Question number 11. A growth objective in investments typically means A. Generating regular income from interest or dividends. B. Preserving capital with no risk. C. Achieving appreciation of capital over the long term, possibly accepting higher volatility. D. Liquidity for next month. And the answer is achieving appreciation of capital over the long term, possibly accepting higher volatility. Explanation is a growth objective emphasizes capital appreciation over time and tolerates higher risk volatility. Which of the following is not a risk measure in case of mutual fund or equity? Standard deviation of returns, B. Beta of a stock, credit risk of a bond issuer, hydrological risk of weather-based farming. Of course, the answer is hydrological risk of weather-based farming. It has nothing to do with mutual fund or equity. Standard deviation, beta, credit risk are financial risk measures. Hydrological risk is outside typical investment context. Question number 13. Behavioral biases overconfidence implies A. Underestimating one's knowledge and ability. Believing one can outperform the market easily. C. Always diversifying the portfolio. D. Avoiding all risks. And the answer is believing one can outperform the market easily. Overconfidence is when the investor overestimates their ability to select winners or time the market. Question number 14. If inflation is 6% per annum and your investment returns are 5% per annum, your real return is roughly 1%, 0%, -1%, 11%. Inflation is 6 and investment returns are 5. So it should be C. Let us see. Yes, -1%. Real return is equal to normal return minus inflation. It's 5 minus 6, 1%. Question 15. What is human capital in the context of individual financial planning? Physical labor machines, present value of individuals' future earning capacity, capital locked in fixed assets, government's bond holdings. Answer is present value of an individual's future earning capacity. Explanation is human capital is the income earning potential of the person, treated as an asset in holistic finance planning. Question 16. Which of the following statements about saving versus investing is correct? A. This is the same thing. Means both are the same thing. B. Saving is putting aside money. Investing is using saved money to generate return and accept risk. C. Saving always gives higher returns than investing. D. Investing does not need prior saving. Answer is saving is putting aside money. Investing is using saved money to generate return and accept risk. Saving is accumulation of idle money. Investing is development of that money with an objective of return and risk. Question number 17. A risk averse investor is most likely to favor A. High equity small cap funds. B. Speculative derivatives. C. Government bonds or debt funds. D. No investment at all. And the answer is C. Government bonds or debt funds, where the risk is relatively less. Risk averse investor tends to choose lower risk instruments like debt or government bonds rather than volatile equity. Question number 18. Which of the following is an example of behavioral bias? A. Buying a balanced fund based on asset allocation. B. Selling when market drops out of fear, panic selling. C. Diversifying across asset classes. D. Periodic rebalancing. And the answer is selling when market drops out of fear, panic selling. Explanation is panic selling is driven by fear and behavioral bias rather than logical planning. Question number 19. The concept of time horizon refers to A. A time of the day you invest. B. The duration over which an investor expects to achieve a given goal. C. The time delay in transaction processing. D. The age of the fund manager. And the answer is B. The duration over which an investor expects to achieve a given goal. Time horizon is the distance in years or months until the goal must be funded. It affects risk tolerance and asset allocation. Question number 20. When constructing an investment strategy aligned with goals, an investor should first A. Ignore the client's risk profile. B. Push the highest return product regardless of suitability. C. Match investment products oblique asset allocation to client's goals, risk tolerance, and time horizon. D. Always pick the cheapest scheme only. And the answer is match investment products asset allocation to the client's goals, risk tolerance, and time horizon. Explanation. Suitability means aligning products and allocation with the client's goals, risk tolerance, and horizon, the core of the investment planning. रिस्क प्रोफाइल उसका देखना बहुत जरूरी है बिफोर प्रोडक्ट उसको सेल दिस इज ऑल नाउ प्लीज सब्सक्राइब और चैनल अगर आपने अभी तक सब्सक्राइब नहीं किया तो एंड ऑल्सो यू कैन गिव फीडबैक इन आवर कमेंट सेक्शन